All right, guys. Can you hear me? How is the video quality as well? I know it was a little fuzzy last time. All right. Perfect Bit Z, hello. William, Amelia, Larry, Retro Lifer, Scott, Crypto Knight. Awesome, good to see you guys in here. Perfect. Sound is good and video is good, so hopefully we will minimize some of the technical difficulties that we had last time. Way better, perfect. Good to hear, Retro. All right, excellent. So hopefully everyone was able to go through and spend a little bit of time back testing some of the RSI movements and some of the zones. So I did get a few questions from after the course through the Discord and through email, so hopefully I was able to clear anything up. But if you guys still have questions as we go through, whether it's that or something else, feel free to email me, send me a message in the Discord, whatever the case may be. Feel free to reach out to me at any point in time. Also, very interested in any kind of feedback, any kind of success, any kind of struggles that you get from anything that I cover, as well as just implementing everything as we move forward, and any kind of questions that you get just as we continue, or if just something isn't clear. So today we're actually going to move on, and I'm going to add a lot to your arsenal today. So I'll try not to confuse anyone as we go through and we move through a lot of this information that we have going. But it's going to be good stuff. It's going to be really good stuff. So today we're actually going ahead and cover a lot of things that revolve around divergence. So that's where we're going to start. So you can see in the PDF that we got that the very first slide is going to be the divergences. And there's a lot of different kinds of divergence, and I'm sure a lot of you are already familiar with what the divergence types are, but there's different classes as well as reversal divergence and hidden divergence. And that's what this next indicator is really going to cover from the CB index, is going to primarily be your reversal and your hidden continued divergences. So a divergence is when the price of an asset is moving in the opposite direction of a technical indicator, such as an oscillator, or is moving contrary to other data. Divergence warns that the current price trend may be weakening, and in some cases may lead to a price changing direction. And there's a little link down here on the bottom. You can get some more information on some divergences, but these are a really good cheat sheet that I have personally used before in the past that will show your reversal divergences, your hidden continued divergences, and just really what they look for compared from a price action to your oscillators. And I covered a little bit on the RSI last week of what some divergence could look like. So the next indicator that we're going to cover is going to be the composite index. So the composite index is an oscillator that was developed by Constance Brown, or Connie Brown, under the guidance of Manny Stroller. So the problem that was faced several decades ago is still present today in regards to the RSI that was developed by Wells Wilder. does not develop oscillator divergences against long horizon price data. The failure to display the divergence signals against price is costly for asset managers, as major trend reversals can occur without any warning from this widely relied upon indicator. And what we have from a CB index is there are no ranges. So this is going to be the biggest change from the RSI. Like Larry, you didn't get the Google link, should be in the email. So if you didn't get the email, for whatever reason, let me know. But the biggest difference between the CB index and the RSI is there isn't going to be a set of ranges, meaning that the CB index can go crazy all over the place in regards to it doesn't have a specific set of zones. However, it's still going to have the fast EMA and the slow EMA. So it's going to be the CBCI. And that's what's going to be on the trading view. So if you just search CBCI space CU, it should pop right up, and it'll have everything already pre-populated for a 14, 9, 3, 3, 13, and 33. Those are going to be your main areas. So we'll go ahead and dive into the charts, and I want to cover a couple specifics because you can see on slide 3, this is really what I'm going to cover in regards to on how well it shows the divergences better than the RSI. So let's go ahead and jump on over there. Let's see, so I think it's this guy. All right, perfect. Let's hide that one and get this one up. All right. So we can look at a lot of different divergences on different time frames. A lot of the content that I'm covering is done on the daily, so I'm just going to stick with the daily, try and keep it consistent as we go forward. So this is our most recent price action up to where we are as of this moment. And you can see from a divergence perspective that we've had all these different divergences that have played out on the CB index that have not played out on the RSI. So what I mean by that is we'll start from left to right. So we have the RSI was moving in the same direction as the price. But if you look at the CB index, we have this point here to this point where we had a Class A hidden continued bullish divergence, meaning that from this point, this was a pretty clear indication that we are going to have continued momentum to the upside. Okay, we get up here towards the top where RSI is still doing the same thing. RSI is increasing along with price, but on the CB index, we have a Class C reversal bearish divergence. And with your different classes, you have your Class A, B, and C. Your A is going to be your strongest. Your Class C is going to be your weakest. So it's kind of a good indicator of the chart. However, you can kind of see things as they continue to play out in regards to if it's a larger divergence, such as here to here, it's a larger point, then you're going to have a stronger reversal or a stronger continuation the further apart it is. So you can see this was roughly half the length of this one up here on the top. So no signal given on the RSI. However, we got a Class C reversal on the CB index. Okay, we have these 2 points. RSI again gave no signal, but if you look at the CB index, we had a pretty strong hidden continued bearish divergence. So even though we were getting a little bit of a bounce here and we were getting some movement up, if you watch how quick the CB index rose compared to price action and compared to the RSI, that is a very strong indication that we are going to have that continued bearish move in regards to the downside. All right, same thing as we continue to go over. Price action is increasing, RSI is going in the same direction. However, we have a Class A reversal bearish divergence right here. Now, depending on the different time frames, they will play out separately in regards to what kind of movement that we get. And the biggest thing this is going to indicate is that it is going to have either continuation or some type of reversal. Now, it doesn't always indicate the extent of what the reversal will be, and that's when we'll get a little bit more towards some Elliott wave and some Fib retracer, and so that way we can look at a couple specifics in regards to what price action can go to. But this is going to be your indication that we are having either continuation or we are going to have some kind of reversal or change in trend. Okay. This guy, again, no RSI, gave zero signal. But if you look at the CB index, we have a class A hidden continued bullish divergence. So right here, we had our bearish divergence play out where we had a drop to the downside. So from 73 to 65, so about an $800 move to the downside. And again, you can see where the CB index moved to the downside quicker and faster than what the RSI and the price did, creating that hidden continued bullish divergence for it to play out. Same thing as we continue to move up to the upside. We have this guy, RSI, again, gave no signal, moved in the same direction as price, but on the CB index, we have a class A reversal bearish divergence that played out very strongly back into the downside. And again, it's what we'll want to pay attention to in regards to how quickly the RSI moves, how quickly the CB index moves compared to what the price action is, because that's ultimately what's going to give you your divergence plays and your little signals for it. This is really the only one that played out on a larger frame in regards to having it be on the RSI, the price action, and the CB index. We double bottomed here on the CB index. However, we had a stronger hidden bullish divergence on the RSI compared to the price action. So this one, all three played out, got a nice little move up here to the upside as well. So pretty awesome stuff in regards to using the CBCI alongside with the RSI, because you can see when we go through and we look a little bit closer on some of these moves, we can take a look at the zones that we have from the RSI to the Constance Brown Composite Index. So what I mean by that is, remember we talked about how the RSI was playing out on these EMAs from your fast and your slow. So you can see right here, we also came down and we were testing the slow EMA, created the divergence here, and got a play to the upside. Same thing, right here we had a move up on the RSI, bounced off of these EMAs, continued to the downside, tested it again, got rejected, and then had a stronger move, but also rejected right here on the RSI, on the slow EMA, creating a better divergence signal on the CB index. So when you compare both of them together, it's just going to complement each other when you're looking at it from a divergence perspective, because not only did you get a signal here as a rejection, but when you complement it with the CB index, right here it's showing a very strong divergence signal for it to play out in regards to continuation to the downside on this particular move. Now, I said before, the CB index does not have any specific ranges in regards. It doesn't play off ranges on the RSI. The RSI is a set range indicator. So depending on different time frames, your RSI will go into the negatives. It will go over 100. There isn't exact ranges that it plays off of like the RSI. And because of that, it shows your divergences so much better. And that's what you want to use in conjunction with your RSI to have better plays. So even right here on this move, we had a nice bounce on your slow EMA. We came back through, we broke through it. But if you look at the RSI, came back and it retested your bullish or your bearish control zone, right at 45, and had a nice bounce, had our divergence, boom, boom. That's going to be your continuation to the upside. So that's what you really want to look at in conjunction and using these. Now, the CB index does also play off of these fast and slow EMAs as well, and very similar to the RSI in regards to whenever you have them cross. Now, the only downside with them crossing on the CB index is because there are no ranges, they are going to cross more frequently. However, whenever they happen at the same time, in regards to the RSI and the CB index crossing together, is a better signal when it happens together, not just playing off of what the CB index is doing. So you can see there's a lot more crosses here on the CB index versus the RSI. However, when you have a clean cross, so we have a cross right here and we have a cross right here, and that had a great play for continuation to the downside. For the move and bounce back up, you can see we crossed here on the CB index, but we didn't cross on the RSI until about right here. So we didn't have as strong as a play. You can kind of see we kind of trailed sideways for a little bit. But when they do cross together at the same time, those are pretty strong signals for your either bearish or your bullish move. So hopefully that all makes a lot of sense. But the CB index, like I said, does play off of these fast and your slow EMAs as well in regards to bounces from a resistance and support. So hopefully it all makes sense. I'm going to add another indicator that I'm going to cover as well in this particular session, and that's the derivative oscillator. And I know that's not one based upon the survey results that is very common that you guys have heard of before. And there's a lot of misinformation on that particular one as well. And I'm going to cover what the common misconception is on that particular indicator versus how to truly look at it and what to use it for. So let's go ahead and dive into that guy real quick. Let's see. All right. So the derivative oscillator, the name on the trading view is DOSC space CU. So if you search that on TradingView, it should pop right up. So the derivative oscillator is a technical indicator that applies a moving average, convergence, and divergence similar to the MACD. It has the histogram to a double smooth relative strength index for the RSI, and it also is going to create more advanced version of the RSI indicator. So there's some people that actually just use the derivative oscillator and they don't even use the RSI. If you want a little bit more information on the derivative oscillator by itself, here is the link. So if you can click on that guy, it'll take you to Investopia, give you a little bit more information if you wanted it. So this one's going to be a little bit more complicated in regards to how it reads because it gives a lot of different types of signals. And what you're going to see very commonly out on the internet in regards to how to use the derivative oscillator is not the greatest information. And I'm going to show you why. So let's just pull this one up. All right, so this is straight off the slide, so same information. So a lot of what you're going to find on the internet on different websites on how to use the derivative oscillator is basically just going to tell you how to go through and basically take trades using the derivative oscillator. And there's a couple different things that it's going to show. And the first one is going to be really right here whenever these points cross zero. And this is going to be a momentum indicator similar to what the RSI is. And kind of similar to what the MACD is. But a lot of what you're going to find is strategies they're going to tell you to basically, whenever it crosses zero, so example right here, as soon as it crosses zero, it's going to tell you to go along there. When it crosses back to the downside and goes into the negative, it's going to tell you to cross and go short here, and then vice versa, and just back and forth, back and forth. And you can play it like that. It's not going to be the best signals, but it is something to be aware of, that is how a lot of people generally play the derivative oscillator. Also, a different way is using this, the RSI line right here. So whenever it basically goes past your candles here, so like right here, that would be your indication to go short. And same thing, so right here, so when the RSI pops out of these orange candles, that is your indicator to take a long. It's like right there. But like I said, it's not the most accurate to do it that way. So I rarely take trades strictly off of the derivative oscillator here. But when you know how to really read the derivative oscillator, it's going to help you with your CV index and your RSI together. So going back to the slides, we go into a little bit of specifics here. So there's something that's called the amplitude equality. So an equal and opposite reaction can be expected throughout the moves of the derivative oscillator. An extreme momentum is plus or negative 10. So when this normally happens, you can expect to have an equal low or an equal high of the same magnitude that gets set in place. And what I mean by that is right here. So a great example, we had the momentum that went into the negative 10 territory. Let's see, what is that? Negative 12. We can expect the next move, or not exactly, it doesn't always happen immediately after, it can happen a couple waves, but we can expect for the momentum to shift and have an equal reaction back into the positive. So we had this one right here that went into a, we'll just call it negative 12, and we had this one, basically same thing, 11.5, so very, very close. And we can expect the same thing on the smaller time frames as well. So it not exactly does it have to be on the daily. It can happen on the 4-hour, the 12-hour, the 1-hour, whatever the case may be. And what you want to be aware of is sometimes it does happen immediately after, but it doesn't always happen right after. Sometimes it takes a couple waves for it to play out, but we can expect it to eventually happen. If it's not immediately, it will happen probably a couple waves after. And it's about an 80% rate that you're going to have an equal move go back to the opposite direction. You can use the derivative oscillator for a few other things as well. Let's see. So we can also look at it for a trend reversal on the velocity. So when the oscillator velocity begins to show no net gain or loss, a significant buy or sell signal can be realized. And basically what it means by that is the little wedge that we actually have going on right now. So as things tend to get a little bit tight, a little bit wound up, kind of similar to what other indicators, the closer that it stays to zero and the longer it stays to zero, the larger the move is going to expect it to be. A great example, was right in here. We were getting pretty tight within this range right here as well. Even, right here before, we were condensing down quite a bit, had a, pretty decent breakout to the upside. They just, continued with the upward momentum. So you can use this to draw trend lines. You can use this to draw wedges and to have breakouts. And not everyone knows it can be utilized that way as well. Another aspect to look at this for is the divergences. And then also, so when basically in a series of new price highs or lows are accompanied by diminishing momentum peaks and it's descending towards the zero line, a sharp price breakdown can be expected before the oscillator hits zero. So great example. What I mean by that is right here. So we can see that the oscillator peaked right here, and then it started to taper off. However, the price action continued to go upwards. And right there is where there was a sharp breakdown to where we had a very strong price reaction without the oscillator going to zero yet. So by the time we got to the bottom on price, the oscillator was only, what, 2 candles in? Even on the first candle, that was our low if you count the wick. So that is something you want to pay attention to in regards to, again, we want to look for confluence. We want to look for what is the different signals that it's telling us in regards to these different types of indicators. So again, when this happens, that's generally a pretty strong reaction without the oscillator getting down to zero yet. And that's basically going to be your divergence play. So very similar to the RSI or the CB index, you can use this to look at divergences, again, where we have price action going up, but we have the derivative oscillator that is still going towards zero. And when that happens, you can expect, again, a strong price reaction before the oscillator ever gets to zero. So that's a good indication. In regards to these little bumps here and there, if it doesn't get past the 2 on either side, it's considered neutral. It doesn't exactly necessarily count towards a swing. It's got to break the 2 in order for it to really have any kind of volume to it. It just kind of tends to be correction and a little bit of choppy. A great way to spot trend reversals is these guys right here. So when we have a strong momentum, so such as right here, we had a strong momentum going up, it tapered off. However, we never got back down to zero, or we never crossed back, and we started to get some volume again. That's generally going to be an indication. If you get a couple candles worth, you want generally 2 is going to be what you're going to want to look for a trend reversal on the volume. That's going to be a great indication that we are having a trend reversal and can expect a pretty significant move whenever this happens. So, right here is a great example where price was dropping, the momentum was dropping as well, and then we started to get momentum back to the upside, and we had a pretty significant play out in regards to going back up to the upside. I mean, from 58 to 72, a pretty decent move. And then you can look at that in regards to right here, we also had the bearish divergence play as well. The price was going up, the volume was going down, giving us an indication that we were going to have some kind of correction coming up right here. And again, played out pretty well. Same thing on the downside, where we had a pretty strong movement and momentum going towards the downside. And right here, where we started to correct back up, pretty hard rejection, and again, trend reversal right here, right at the top, called it pretty well, and that had further continuation to the downside. Right here, I would even consider a trend reversal as well, because it barely broke over the 2, I mean, that 2.4. So 1 is going to be strong. When it happens 3 times, that it's going to indicate even stronger. So you will see a couple of bounces. You don't see a lot of this happen on the daily. It's going to be generally on the shorter time frames, such as the 1 hour. You can use it on the 15-minute as well. So a single trend reversal, you'll have a pretty significant play out. So you can see from 94 to 84, so $1,000 move without a ton of momentum behind it. And then even right here, when it happens again for the 3rd time, generally it, from I guess a standpoint of consistency, it is going to at least double it. And obviously you can see right here we had a great play, giving that indication that we're going to have further downside, being that we did not break above the 2. Okay. So a lot of good information utilizing this particular indicator in regards to looking for signals and looking for confluence and looking for divergences. And that's really what I want to highlight as we go into a couple other things throughout this masterclass is how do we utilize different indicators to complement each other for different signals that are going to help set up a very specific strategy for you. Because if you don't have a strategy, it's kind of just gambling. However, if you have a specific strategy that you can say, all right, well, it met divergence on the derivative oscillator, I have divergence on the CB index, and the RSI is approaching a specific zone that is going to find resistance or support to, that is a great indicator to meet some requirements to take some action on. So let's go ahead and pair up a couple of these guys here. So we'll get some of these other ones on the chart. So I want to show you just guys how to try and compare it together. And then I didn't cover this before, but I'm sure you guys saw on the PDF, these lines aren't on this chart. I put these on using the drawing tools. And basically your 10s, again, are going to be extremes. Your 2s right here where you're going to want your confirmation to get over. And then I put a 5 here just because that tends to be a pretty common support and resistance area for the derivative oscillator as it plays. Tends to have a pretty decent reaction right at it or just slightly above it. So just, again, something to watch for. Last thing on the derivative oscillator that we can look at is in strong moves, we can find support and resistance on particular areas. So we'll look at this whole bull trend right here. You can see the derivative oscillator on the negative side for a support found the support right at the 8. So hit the 8, bounced off support right here, hit the 8, bounced off a support right here, hit the 8, bounced off a support. This one went a little bit past, not by a ton, 8.5, found some support. And then right here on this guy, we went down to the 10. So that is a good indicator that you're going to have some type of reversal play out. And you can kind of see right here where we came up and we had that trend reversal where we never got back into the green, and we had a nice continuation to the downside. So you can see this in the strong trends, whether it's the daily or the 1 hour or anywhere between. You can see that it will find support on specific areas to help throughout the entire trend. And when you have that and you notice it, your next one, or if you do have a move that does break it, whether it's bullish or bearish, that's a good indicator that you're going to have a type of reversal. So let's see what we have from a complement from a reversals perspective. So we have this guy right here gave a signal for potential reversal because it dropped below the 8. It went down and it touched the 10. We have right here on the RSI, came back up and it touched the bullish control zone right at 60 and got rejected on your fast moving EMA, also bearish. And on your CB index, it's like we had a cross right here that was shortly after it between your fast EMA and your slow EMA. So all good, pretty strong signs that we were having a type of trend reversal utilizing all three of these. Continued play. So we can see right here we had a pretty good trend line. We had divergence on this guy we can look at. Boom, boom. Where we actually had RSI still continuing in the same direction. We had the CB index also showing a divergence play. And you can see after a rejection on the EMAs here, we broke through with power. Also got a cross up here to the upside after a bounce that's right here on the 40 zone on the RSI, giving us a good indication that we were going to have a pretty decent move to the upside, especially when the RSI on this guy passed over the 0 line. So that's what I look for whenever I go through and I have these different indicators, because price action alone is going to tell you something, RSI alone is going to tell you something, the derivative oscillator alone is going to tell you something. But whenever you're able to pair up different indicators and look for confluence, it changes the game entirely. And this is just using the indicators. This isn't getting down to as specific as you can with, fib retracements and Elliott wave, all that kind of stuff. That's going to come a little bit later. These are just going to be your confluence for signals to help identify potential trend reversals, trend continuation, and so on and so forth, or even, reaction from potential moves, such as this one right here. Obviously broke below the 10. You can expect the equal reaction to play out within the next few waves, in which it did. Boom, right here. When you know that you have this move right here that came down to the 12, and you can watch this as it comes up and it gets close to the 12, you know that that move is going to be, it's going to be done. And you know that you're going to have momentum that is going to start tapering off and start to have correction back down to the downside as the waves form and as price action plays out to the downside or the upside. And you can kind of watch your indicators and see, all right, what kind of divergences am I going to have? What is it telling me on the RSI? What is it telling me on the CB index to help portray what the future price action is going to be, just using these 3 particular indicators that I've highlighted here. So hopefully I didn't confuse anyone immensely covering these particular ones. I know it's a lot of information. There's a lot of different signals and ways to look at these particular ones, which is why I wanted to cover, specifically the RSI and the RSI zones first, and then throw these ones in here as well, because the CB index, you're really just going to use this to help better identify divergences. Because as you can see from the first slide, the divergent signals that were given on the CB index were much, much better than what was given on the RSI. And then from an expected moves to a momentum play, that's where you can kind of utilize the derivative oscillator to help identify potential swings, what some reversals could look like on a price action, or how strong they may be, and help project a little bit of price action and go from there. So I'll go ahead and turn it over to you guys. I know I covered a lot. If you guys have questions, I am definitely going to open it up, help identify a couple confusion points if there were any, but I'll open it up to you guys. Holger, show it on the 5-minute. You got it. All right, so let's see what we got. All right. So we got a good old Bitcoin here on the 5-minute chart. The smaller the time frames, again, as all signals and indicators, you can have some rapid fire in regards to some of these signals, which is, again, you want to try and find confluence on them. All right, so you have your we'll just look at a couple different things here. So obviously we have some bullish divergence between these points. On thought I had it on the CB index, but not exactly. But we definitely do on these guys. So again, 5-minute can be kind of tough just because you're going to have a lot of different signals. I try and stick with a 15, but you can see you have your divergences between these points here. We didn't have any kind of trend reversal play out. What I'd be curious to look for right here is if we start to get another swing back towards the upside for a momentum. You have your RSI that's back up here trying to get out of your bearish control zone on your 45. It is getting rejected, but also finding support on your fast EMA. And on the CB index, we have broken both of these fast and slow EMAs and getting currently rejected right here on your slow EMA. We have momentum that's pointing backwards or back down to the downside. So we came back up, we hit this point right here, and we are having quite a bit of resistance right here on these particular indicators. Let's see, pair 15-minute. All right, so let's get the 15-minute up. All right, so right here is a pretty good example of why you don't exactly want to use just the derivative oscillator to take any kind of trades. And honestly, I mean, there really wasn't anything good throughout some of these that gave good signals throughout this whole sideways correction. Just you can see that, how much it just swam back and forth with not a lot of volume towards one side or the other. You can see, right here, we had a pretty good indication that we were going to have some movement back down towards the downside with that trend reversal that showed up right there. Then even you can see, right here where the RSI failed to get back above the 0 line, I was finding resistance, which is all pretty bearish. Same thing right here on this guy. Finding resistance on these fast and slow EMAs. Let's see. Yeah, CB index didn't really give any kind of information for any kind of divergence plays. A little bit, but you can kind of see on some of the smaller time frames where when we are in consolidation that we can look at a lot of I guess rapid fire for what it truly gives and signals. That's why you want to, when you have an area of consolidation, you want to look for something more towards a larger time frame, just to help give a little bit of clarity in regards to what kind of direction they ultimately can play out. And sometimes you just need to wait for one move to play to help give you some clarity in regards to what the potential next move could be. Let's see. So hopefully that cleared up a little bit of information from a smaller time frame on some of the false signals. Danny, what's the difference between this and the MACD? So the MACD is they're going to be close. So let's see. Let me go back to the slide for the derivative oscillator. So it's with the derivative oscillator, it's basically going to have your convergence and divergence just like the MACD does. Similar histogram, double smooth relative strength index. A lot of it's going to be the settings that are within it to help look at some momentum differently than what the MACD does. And the reason why I like the derivative oscillator versus the MACD is because the settings that are put in the derivative oscillator are going to be catered a little bit more towards fibs and Elliott wave, which is what we're going to go into coming up over these next few sessions. So the settings are going to be a little bit different, so it's going to show your momentum differently than what the MACD will, because it's going to be based around a lot of fib numbers and Elliott wave that's going to go into it that's also going to utilize fib numbers. So it's going to help match up a little bit better using Elliott wave versus what MACD will. So hopefully that answers that question for you, Danny. All right, what else? What other questions do you guys have? I know I covered a lot of A lot of info today on these particular oscillators. William, how do you backtest this indicator? So really for any indicator, what you would want to use and utilize is the replay button, which is going to be right up here at the top. So if you go back and select a point in time, hit that guy, and then hit your play, you can change your speed for how quickly it will play out. But you can use it for these indicators. You can use it for any indicator if you want to look at a specific strategy. And basically you just watch for the moves to play out. Like I said, you can speed it up, you can slow it down, and just watch for your oscillator, your indicator reactions to say, all right, well, I'm noticing a signal here. I would, potentially look at doing something on this particular move here, so on and so forth. You can do it different time frames. You can do the daily, but utilize this to help look at how the price action plays out versus how your indicators give your signals. Again, you can do it on whatever time frame you want. You can do it on whatever speed you want, but you can go back at really any point in time in history, select the line, and then just hit play, and just really go through, and as it plays out, you can make notes and hit pause and make an adjustment or whatever the case may be. But definitely utilize that to go back through and really just look at for the confluence or your price action for what you'd want to do to potentially take some action. Let's see. Holger, for the low time frames. So the time frames that I personally use specifically are going to be the 15-minute, the 1 hour, the 4 hour. I'll sometimes look at the 12, but then I'll do the 16 and then the daily. The reason for that is because I want to keep everything uniform. So a great example, so 15, there's basically 4 15-minute candles in the 1 hour. There's 4 1 hours in the 4 hour. There's 4 4 hours in the 16 hour, so on and so forth. So the daily is the only one that's a little off, but it's one that's very commonly used. So those are the time frames that I will primarily use whenever I am looking at doing any kind of technical analysis. So if I don't have any kind of clear signal on whatever time frame I'm looking at, then I'll generally go out to a further or a higher time frame utilizing those ones that I just talked about it. Let's see. Have I used the awesome oscillator? Which one's the awesome oscillator? Is there actually an oscillator that's called awesome? Because if so, I have not. But it has me very interested. Let's see. Preferable time frames, I just covered that. Kryptonite, on the composite index, what time frames do you find best results, or on all from, say, 15-minute 1 hour? It just depends what kind of setup I'm looking at. So if I'm looking for something a little bit more of a scalp, then I'll tend to look at the smaller time frames, such as the 15s. If I want to do something more of a swing, then I'll go out to a higher time frame, such as the 4 hour and the 16 hour. So it just kind of depends what kind of setup that's ultimately that I'm looking for, or what I'm planning to ultimately do. Generally, I'll start at the 15 and see what I can look at from a nearer time frame, and then I'll go back out into a higher time frame and look at what the price action zones can be to see if they match up on a higher time frame. Because if you can get a 15-minute price zone to line up with a 1 hour and get that 1 hour to line up with the 4 hour, that gives the same type of signal or same type of indicator. Again, same thing as if we were to use all three of these together and see what kind of signal that it's giving you. Same thing on the time frame. So if you're getting the same type of indicator signal on a 15, a 1 hour, 4 hour, 16 hour, so on and so forth, that again, the stronger the confluence, the higher the success rate you're going to have with it. So hopefully that makes sense, Danny. I'm sorry, Crypto Knight. Sorry you asked that one. Let's see, Danny, can you add the bullish and bearish control zones to the composite index? So obviously anything below the 50 line is going to be your neutral zone. However, kind of how I said before, it doesn't actually play off zones exactly how the RSI does, just because there's no set zones for the composite index. So you may see some time frames where you're going to have your composite index go well into the negatives and well over 100. Obviously, those are going to be a little bit more of your extremes, and you can, take note of that. However, it doesn't exactly play off zones how the RSI does. Again, just because there's no restriction on the price movement of the composite index, which is why it shows your divergence so much better than what the RSI does. So, I mean, yeah, that's something you want to be aware of in regards to see, how far one direction or the other to look at some potential extremes. But like a bullish control zone for the RSI on the 60 to 65, it's not going to have that on the CB index. It's not going to play the same way that the RSI will. So hopefully that answered your question, Danny. All right, so it's actually called Awesome. All right, let's see it. The Awesome Oscillator, of course. Oh, okay. Yeah, it is similar. I'll have to do a little bit of research on it. I'm not sure what the settings are though. I'll have to do a little bit of research on this one, but yeah, it is definitely similar. Huh. Yeah, I'll have to do a little bit of research and see how it compares to the derivative oscillator. Part of the reason too why I like to look at the derivative oscillator in conjunction with the RSI and the CB index is because Constance Brown, she created the derivative oscillator and she created the CB index as well. So basically knowing that she created both of them, she created them both to work, and complement somewhat to each other for the settings on Elliott wave. So that's part of the reason why I like to look at it both at the same time. Let's see. Olger, where do you think the price will go shortly? Let's see. All right. Take a quick look at that. Let's get rid of these guys. Let's throw CB index back on there. All right, so from a daily perspective, just taking a quick look. So obviously we did get a move for any of you guys that were been following me recently. I have been expecting a pretty decent move to the downside. Just in regards to I haven't been able to get a clean count for it to be moving up impulsively, which means that it would be all corrective. Even with this move here, you can see that on the derivative oscillator that we're still in our we still didn't even crack over the 2. RSI creeping back into the bearish control zone as well as the CB index. We did have a bearish cross with the RSI that is dipping back into it. So there was a couple different things that I have been looking at. So one of them, I'm going to do a little bit of Elliott wave as well. So one is that this whole thing right here was an A, B, then coming down for a C, being that we did break this particular trend line that has been strong at 45 degrees. That's fairly bearish. We are still in the 9300 range, also fairly bearish. That we didn't have pretty strong immediate reaction. I mean, a little bit of a wick there, that's to be expected, to try and get back above the support right here at 93. As you can see that it's been a very, very strong support line going all the way back through history of Bitcoin for the most recent price action. So this whole move right here, we were just bouncing off of 9,300. Same right here, bounced off 9,300, came up, got rejected, back here, bounced off 93, had resistance around 93, 94. So pretty important zone for us to hold for where we're at from a 9,300 perspective. So if this would have been an A, this seemed pretty 5-wave. I would expect another 5-wave move down, if that's what this is. So giving a little bit of a sneak peek. So even if that's a wave 1, we can be looking at roughly 7,500 for a full 5-wave move down. And you can also see that for where a wave 5 would finish around 76 is also at the 1.236 for this to be in another ABC. So a lot of confluence around the 77 for a move down. That's if we fall back below the 93. Let's take a look at the 1 hour real quick. As this 3-wave move here, this could also just be an ABC right here as well, creating this a WXY. Probably have, if we continue down, probably around 9K, we'll find a little bit more support as well. Seeing that we haven't had the strongest reaction, in my opinion, from where we are right here. So, I mean, a decent buy up, but that's, to be fairly expected with how, bullish and how well we've been holding this control zone. If we lose, the 93, I would expect another move back down to around 89 to 9K. And then going from there, depending on the wave structure, I mean, this obviously is pretty strong, that we could be potentially looking at we may even come back up a little bit higher, retest the trend line. Yeah, we got 1.618. It also lands at 7,900. So a lot of different support zones for what we have on this move down, which is a little bit more in the bull's favor that we've created quite a few different ones. So some strong points of interest would be roughly right here, 76. I'd also be looking for another one right here, 82. And depending, probably another one around 89, depending what kind of reaction we get here, because this is going to be pretty important to see how we react to this zone. As you can see, this whole area right here, that's, we're now on top of what was resistance, or right at that point where if we roll back over and lose it, I would expect continuation, really down to the 7,600 mark. Especially if we can't keep the 93. But if we kind of play around and we come back up, I would expect, potentially try and get back, test the trend line back around, 96 if we have a pretty decent reaction, and then, still potential move back down to the downside as well. Let's see. Yeah, had a pretty strong resistance up here on GAN as well. So I'm gonna give you guys a little bit of a sneak peek. So pretty strong resistance area on GAN. Next major area support, also 8,200 on the GAN chart. So it'll be interesting to see how we react where we are, because if we come back up again, we'll we have resistance back up again at 96 because we lost it. So be looking for potential continuation back down to 82. It'd be ideally, in my personal opinion, if we can't break and get back around 93, 96, then I'd see continuation down to about 82. My opinion for what I'm looking for. Obviously, a lot will play out between now and then. We'll get a better idea on the wave structures here. Let's see. Danny, how many confluences do you need in order to take a trade out of Elliott wave? And all three of these indicators. So Danny, for the way that I look at it, I need at least 3 specific points, and they need to tell me exactly from a price point where to enter or exit, or else I'm not jumping in. So for me, kind of the missing component, I'm sure you guys may have seen before, is just Elliott wave in general was kind of the missing piece, because that gives me a lot more specific on a price action to jump in and out of based upon the fib retracements. Get rid of those. But I need 3 different things to confirm an entry and a potential exit in order for me to jump in. So those different things could potentially be, whether it's the 1.618 on a fib retracement, it could be a rejection on an EMA, it could be a support on a bullish control zone, it can be a bearish or bullish divergence playing out, it can be, a trend line on the oscillator, whatever the case may be. That's why I look for 3 different things, because they're going to give different areas of confluence, but for me personally, I need at least 3 things to match up and tell me to jump in or out. There was bearish divergence on the daily and the 4-hour time frame. Yes, that there was. So you can even see on the 1 hour, we don't really have any kind of bullish divergence or anything like that to really play off of yet, but pretty strong support zone for where we fell to. All right, perfect. What else? What other questions? In regards to these different indicators, guys, get familiar with each one individually before you try and start to look at all 3. So what I again would recommend doing is going back, utilizing the replay, get familiar with your RSI, how it's going to react to the zones. Go back, look for your divergence plays on your CB index, and then go back and for the derivative oscillator, like for such as your trend lines, your trend reversals, such as this guy right here, your equal and opposite reactions for it to come out of your 10 extreme limit line, and get familiar with those, just because it can be a lot when you're trying to learn new indicators or how to use an indicator differently to try and combine it with multiple ones. So go through and get familiar with each one individual, utilizing the replay button. Spend some time on the charts, even looking at live charts. Make little notes or bubbles on the charts for some things that you guys see, or write it down, and then you can kind of start to layer on different aspects of it and different pieces of it to try and look for the different areas of confluence. Because once you get familiar with it, it's going to be pretty easy to help identify what are some things that you're looking for. Even right here, as we started to topple over, things that I'm seeing, we started to have a little bit of a trend reversal right here. So we have continuation to the downside right here. At this point, we got rejected on the top of your bearish control zone. We couldn't get back out of it, as well as this fast EMA, and we had our EMAs cross right here for a bearish cross on your RSI. All indicators that this was going to move to the downside without really even looking at what the price action was at. So get familiar with each one individually and look for things like this, and then you can start to layer them on top of each other again, just to look a little bit familiar. All right, perfect. All right, hopefully, again, answered all the questions you guys had, and got some pretty decent clarity in regards to these different types of indicators and the signals that they give, and how to spot some reversals and some areas of confluence and some signals that are telling you guys. Again, if you have questions, make sure you guys message me. Email me, send me a message in the Discord, whatever the case may be. Always happy to jump in and help you guys out. Send me some charts. I'll be happy to look at a few of them for you, help analyze some of your thought processes for what you're looking at, and hopefully get very familiar with these, because next week we're going on to the next step. We're going to keep this train going, guys. So again, thank you. Appreciate any feedback you guys have. So if you guys are having success, if you guys are having struggles, again, send me messages, let me know, that kind of stuff. I want to be here to help you out. I also want to help celebrate your wins as well. So if you guys are having success, let me know. I'll give you an internet high five from Seattle, Washington, through the Discord or through email, whatever the case may be. But want to hear about all the good stuff that you guys are having as well. So share the wins, share the opportunities. I'm here to help you guys out. And I will talk to you guys in the Discord, and I'll see you guys next week.